Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Kaaren Hall. Thanks for being on the show, Kaaren.
Thank you, Whitney.
Yeah, I'm looking forward to this. I appreciate your time. Kaaren has a background in property management, real estate, mortgage loan services, servicing and origination, in addition to 12 plus years in the self-directed industry. She has helped tens of thousands of investors understand the power of self-directed investing, and she serves on the board of directors for the Retirement Industry Trust Association. Mm-hmm. Her company, uDirect IRA Services, has over $500 million in client assets. That's a lot, Kaaren.
It's a lot. I had to get a bigger bank.
Yes, or start your own bank. So, Kaaren, tell the listeners a little more about who you are and who uDirect IRA Services is, so we can get a little background on you, and let's dive into this self-directed stuff that's so important in our industry that we need to know about.
Oh, it's crucial. Yeah. So thanks. First off, I'm thrilled to be here. uDirect IRA Services, I founded the company in 2009 here in Orange County, California. But over the last 10 years, because we just had our 10-year anniversary, we have accounts in every single state in America. So we are national, and that's awesome. So we have about over 5,000 account holders, happily self-direct, most of them happily self-directing their IRAs. We can talk about due diligence for those that are not so happy, but it's risk with investing. But we've got thousands of account holders building their retirement, which is just so incredibly crucial. IRAs, self-directed IRAs, are for retirement purposes only. That's why you use them, to save money for later on. It's not to make money today, so you can, and that's a common misunderstanding. So either you're using your self-directed IRA to build your retirement, or what you're doing is you're using other people's money. So maybe you're tapping, especially if you're a syndicator, tapping into some of like $30 trillion in American retirement money. I mean, it's so much money in the American retirement pool, and only about 3 or 4% of this pool is tapped for what's called alternative assets, basically meaning not the stock market, not CDs or something like that. So alternative assets, a huge opportunity to raise capital from these self-directed IRAs.
What's the best way to tap those millions? I know so many people that are listening are wanting to raise capital, right?
Millions of dollars, yeah.
How do we do that? Give us a couple tips.
Yeah, well, I think when you're talking to somebody who's an investor, you want to ask them, do you have an IRA or do you have a 401k with a previous company? Because if the answer is yes, they can invest in your deal, and they probably don't even know it. And most people don't know this. And then you can enlighten them and say, yes, your money doesn't have to be invested in mutual funds. Your IRA doesn't have to be in the stock market. Your IRA can be invested in my deal. And it's not withdrawing the money from your IRA. It's just buying a different asset. It's just a different widget in the bucket called an IRA, or a solo 401k, a self-directed account.
That's good to know. I mean, even to be able to say that it's not withdrawing the money from your IRA, because I may know that, but I may not think to tell an investor that, just so to kind of ease that burden or that fear, right, around, there's going to be a penalty, or there's going to be some, I don't know if I want to take that money out. That fear that they may have, they may not even know to ask.
You can't believe how prevalent that is. You're exactly right. So when you transfer money from an IRA or roll over an old 401k or old 403b, 457, an old employer plan, when you're doing that, a custodian to custodian transfer isn't taxable. So when the money rolls over into the self-directed IRA, not a taxable event. And then also when the IRA invests and the money goes out of the IRA, you're not pulling the money out personally, so you're not going to get a 1099 for investing, and therefore it's not going to be taxable. Super important. Big misconception.
What about thrift savings plans?
Yeah, TSPs, sure. I mean, if you leave the service, then of your employer, yes, you can roll over a TSP, absolutely, and use that. As long as they're qualified funds, meaning they're tax protected, ERISA funds from an employer plan, IRA funds, then yes, you can self-direct that money.
Okay, well, let's talk about that due diligence you were talking about a little bit for those other IRA holders. Walk us through some due diligence that we need to be aware of.
Yeah, I'm going to talk about the basics, but I think it's worth it even for the most seasoned investor, because a lot of times we know everything, but we don't remember it all the time. We have big brains, but we can't remember everything all the time. I mean, first off, you have to do your due diligence. If you're investing in a syndication, you want to talk to other people who've invested with that syndicator. And obviously, you want to read the entire operating agreement. You want to read the subdocs. You want to understand what's going on so that you understand the principles, who's involved, what's their track record. Google them, comprehend everything you can. If you're investing in real estate, just straight up, brick and mortar, then you want to do your due diligence by maybe getting a preliminary title report, looking at the property itself, really taking, a look at the conditions. Again, figuring out if you're working with somebody, Google them, find out about them. And but what's really important with real estate too is making sure that your IRA's interest gets actually recorded, because you want to make sure that your IRA actually owns that asset after the money's been dispersed. So we can disperse the money, but when it's a self-directed IRA, you're double checking to make sure that your IRA's interest actually got recorded.
How do we do that?
Yeah.
How do we make sure, how do we check that?
You check it with the county recorder's office, and you sometimes you can just look it up online, especially you probably have an APN, assessor's parcel number, or something you can use to refer back to the property. And then I know that they don't always operate at lightning speed, but once, you can always check and check with the county recorder's office, make sure it got recorded.
So I know some investors that are listening are thinking, now, wait a minute, I live in New York and the sponsor that I'm investing with is in, Wyoming or, I don't know, somewhere else. So, where would they be checking for that?
Well, online. I mean, no matter I know that especially on the East Coast, a lot of times these, some of the county offices are actually in people's houses, in some of the smaller areas, but I would go online. We're so lucky to be connected electronically. It's a lot different than it used to be. So that's what I would say. Go online, make a phone call, pick up the phone. Hey, and then get details. Cause you're right. Every county, and how many counties are there in America? A lot.
Yeah.
So every county is a little bit different. So check with call the county and see how you should check.
Okay, so make sure your interest is gets recorded when we're investing with our IRA. So anything else that when we're investing with our IRA that we need to be thinking about when we're looking at a sponsor or deal?
Yeah, quick little story. We had someone who was just like this close to losing her money. She had gone to a seminar and she had lost a lot of money in the recession. So she was eager to build it back up for retirement. So she went to the seminar and they said, hey, well, why don't you make us a loan? You have $500,000 in your retirement account. Why don't you make us a $500,000 unsecured loan on real estate and we'll pay you 15%. Well, she wasn't a sophisticated investor and that sounded like a good idea to her. She was all ready to go. But then we took a look at it and said, this deal is not administratively feasible. We just didn't look very good because a couple of things. When you're dealing, in this case, it was a syndication. So when you're dealing with a syndication, the people offering the opportunity have to be registered with the SEC in the state, and that actual offering has to be registered with the people, with the state, right? With the SEC in the state. So check with the SEC before you do a syndication deal. Are they actually registered? Okay. Now, this investor didn't do that because if she had, she would have learned that the people she was about to give her $500,000 life savings to had been incarcerated by the SEC. He was in jail for 2 years for stealing money from people. So gosh, on uDirect's website, on the right-hand side, we have a list of, different places you can check for things like that. The SEC, FINRA, NASA with an extra A, even AARP. All of these websites can help you check out these asset sponsors and weed out the bad actors.
That's some great info there, because a lot of people can talk the talk, right? And it really make you feel like they're very trustworthy. But if they've done no background checks, and like you said earlier, even just a simple Google search, a lot of times will tell you, even looking somebody up on Facebook can tell you a lot about somebody. And okay, so we're going to look or you said, is the deal administratively feasible, and looking the operators and the deal at making sure they've been registered. So what else as far as, when we're looking to invest with our IRA?
Okay, well, then you want to take a look. You and I were mentioning this off camera a bit, but I'll mention it now. So if part of the due diligence is when you look at a syndication in particular, is the syndicator, the asset sponsor, are they taking on debt? because if that syndicator is taking on debt, it could lead to the IRA actually being taxed. Ugh. I mean, you don't want to have tax in your IRA. That's why you're investing with an IRA. So it can be tax-free or tax deferred, right? But there's a tax called UDFI, unrelated debt financed income tax. And so I'm not a tax expert, but here's where you can find information on it. It's irs.gov, publication 598. So again, irs.gov, publication 598. We'll talk about this tax. But we have account holders that'll be investing in syndications. The asset sponsor, the syndicator, is taking on debt as part of the deal. And then now here comes a K-1 rolling through. And at the bottom, it tells them that, here's the tax that you owe. The IRA has to file a 990T and pay that tax. So that comes as a very large surprise to syndication investors when nobody told them up front. So when it's a self-directed investment, you're held to the responsibility of being the expert in investing, because all of our companies, we're administrative, we're not fiduciary, we're not selling you assets at all. So you need to make sure you're the expert in it. And there you go. That's how that works.
Okay. So any ways around paying that tax, or should we not use our IRA to invest in, to keep from paying that tax, or, what are people doing to minimize that tax?
Yeah, you can't really minimize it, but I think what you want to do is you want to talk, if your IRA is investing in a syndication, you want to make sure you ask the asset sponsor, hey, are you taking on debt? What percentage is debt? Because maybe your profits are going to far outweigh the risk of any debt. So yeah, okay, I'll pay a little debt. I'll pay a little tax. That's fine, because I'm going to get this big payoff and it's totally worth it. So you have to pencil out the deal in advance. But the only way to avoid this kind of tax is for your IRA to invest, when we're talking about syndications here, is for the IRA to invest in a syndication that's not borrowing money, not taking on leverage at all.
And that's not going to be many.
Yeah. Or here's another way. Okay, I came up with one more. Don't invest in a syndication as an equity partner. Invest as a debt partner and lend your IRA money to the syndication. In that case, that tax won't apply. So there is a way out.
Interesting. Now, how often does that happen, or have you seen that?
Oh, we see it all the time, especially around tax time. What is this? What have I got? Or when K-1s, pop out, and then there are a lot of questions. What do I do? How does this work? And so the account holder has their CPA file a 990T, and the IRA pays any tax that's due.
So how long does the process take if I have an IRA and it's been sitting over here and this is the first time I've heard of this, and it's like, well, wait a minute, Kaaren, this is brand new, and this is great information, but there's a deal that I want to invest in, how long does this take?
It's a 3-step process, essentially. The first step is to open an account. So once we get the documentation we need from you, like the application, and there's a $50 setup fee, and we need a copy of your ID and so forth, we open it the same day. So boom, your IRA is open. That's great. Step 2 is funding that IRA. And so you can do that 3 ways. You can contribute. So you write a check out of your checkbook and put it in your IRA. That's 1. 2 is doing an IRA to IRA transfer, where the money is presently in an IRA. You fill out our transfer form, you sign it, give it to us, we sign it. We send it to your current custodian, like Fidelity or TD or whomever, and then they move your money over. That's 2. And the third way to get money in your IRA is a rollover. So that's a previous employer plan. Like you said, TSP, maybe it's a 457, 403B, 401k, but a previous employer plan, then you can roll it over. So you open the account, call that previous employer, hey, here's my new account number. I'd like to roll my money into this account, and they'll do that, but they'll take about 2 weeks. So opening is a day, funding can be as long as 2 weeks, so plan for that. But while we're waiting for the money to come in, we can be looking at your investment documentation, getting it all queued up. So once the money hits, boom, you can invest, and we can send the money out. So otherwise, it's typically a 24 to 48 hour turnaround when we get the docs until funding.
What about any trouble with working with the current custodian? Or our previous custodian, like trying to get the funds transferred and stuff?
Sure. I mean, sometimes you do run into trouble. Sometimes they don't wish to relinquish the money. Oops, we lost the form. You didn't do it right. Or they discourage you from moving the money by putting you through the ringer. So sometimes you have to be determined to make it happen. That can happen. But I think most custodians are straight up and will help you. And I think self-directed IRAs are well established in the public knowledge that these different custodians understand what it is, and they're pretty much all willing to cooperate. But you will occasionally run into one that's going to stonewall you.
Uh, are there any other questions that you hear from investors that, maybe us as deal sponsors that you could help us be aware of or prepared to be able to answer?
I mean, it's all about your risk usually. And they've got questions that, they'll call me, they'll say, what is the return on a self-directed IRA? And it's like, no, you need to ask the asset sponsor. So I think people are extremely interested in the returns. They want to know, when are they going to get paid back? It needs to really be laid out so clearly what the terms are for payback. So, hey, I just invested with you today, but wait a minute, it's a month now. I haven't received any money. Where's my money? It's like, no, because you're in this deal for a while. This is a fund. You're probably not going to we're not going to see anything until for maybe a year. I invested in a private placement and I kind of wrote it off because I hadn't heard anything in 7 years. And all of a sudden, here comes double my money back into the deal. So it was a long-term hold in a elder care facility. So, you don't know, but you need to talk to the asset sponsor and find out. It was not a large amount of money, or I would have been on the phone, but I just kind of wrote it off and there you go. So make sure that your investor is aware of the timeline for a return on investment.
Wow. No communication in 7 years.
No, it was just crickets. Yeah.
Wow. So, that's interesting in itself. You got to be communicating. I hope everybody that's listening, that's an operator, is communicating with their investors.
If it was bigger, I probably would have been on the phone, but I had other fish to fry,
Yeah, right. And so what about when we're investing, say as a passive investor, I mean, anything else that, I don't know, that I need to know about, I don't know, the IRA process, or even working with you specifically that we hadn't talked about?
Well, I think when you're a passive investor and when you're a self-directed IRA investor, you're not necessarily always passive. I mean, think about this, because it's self-directed. So maybe your IRA has lent money as like a note investment. Maybe your IRA lent money and it seems passive because you're not out there swinging the hammers, but still you need to be active with your self-directed IRA account, logging in, making sure funds got posted, making sure just taking a look at your account. Does it look right? Check on it, do your due diligence with your own account. We also provide a monthly statement. So download your monthly statement, save it on your computer. Don't wait, because we have someone right now who had a fuss in 2012, and now she's trying to prove that she paid off a note in 2000, that a note was paid off in 2012. And she never looked at her account. She never double checked or anything. So it's not passive with the self-directed IRA. You got a little bit of work to do, not a lot, but just make sure your money's there and check it out.
And could you elaborate on maybe the relationship between, like, you as the custodian and the operator? Say we're operating a deal. What does that look like, communicating with you, and when and how often?
Sure. So uDirect is an administrator. So when you are working with us, there's and then we use a trust company. So there's different players in this game, right? So that's like kind of setting the stage for how it works. Kind of like, how do you win a game? You got to know who's playing the game. The asset sponsor is the person offering the opportunity. You find the opportunity in a self-directed IRA situation. So it's self-directed. You found the opportunity. You bring it to us and you tell us, hey, I'd like my IRA to invest in this deal. You fill out a direction of investment form. We call it a DOI. You fill it out. You tell us, hey, please move my money. And then we administrate it. We work with you and make sure everything's correct. And then we, get the money gets transferred out. And now your IRA is invested in that deal. And then it's up to you to look at the terms of whatever that deal was, if it was a note, if it was a syndication, whatever it was, and you need to be on top of it to make sure that that the people that you gave money to are performing as agreed. I hope that answered your question.
Yeah, but are you then, as the custodian, are you communicating at all with the deal sponsor, or the operators of the deal, the syndicator, or are you only communicating with the investor who's investing with their IRA?
uDirect communicates with its account holders. We communicate with our account holders. I mean, if the asset sponsor calls us and they have a question, we can answer if we have a third-party authorization on file, from the account holder saying, yes, it's okay to talk with them. But we would never give information to anybody other than our account holder about an account without permission. So that's how that works. We're not going to reach out and call them without permission.
So when distributions are made,
Mm-hmm.
they are, and the distributions are made to you or to the investor.
They are never made to the investor. We had somebody make that mistake, and they paid these investors personally, and these people put the money in their account. Guess what that is? That's called a prohibited transaction. You know what that means? For a self-directed IRA, it means game over. You are out. All the money, if it gets called as a prohibited transaction by the IRS, then what happens is your IRA ceases to be an IRA. That money goes to you. You get 1099 for everything. So never, as an asset sponsor, ever give the money to your investor directly if it's an IRA. Always, always give it to, or make the checks payable or send the wires to the IRA account. Incredibly important, because you do not want to be the asset sponsor that causes your investor that much hurt.
And it's good for the investor to know that as well, right? Like,
Yeah.
do not cash that check if
Yeah.
they do accidentally send you one.
We had this one investor, and he had a house in his IRA, and so the renters were paying him rent right every month. He was just taking it and putting it in his pocket, and so we said, and he told us he was doing this, and we said, no, you can't do that. He says, oh no, it's okay. I claimed it when I filed my income taxes. Like, it's not personal money. Your IRA is a bubble, and everything stays inside that little bubble. It stays inside that bubble. So never mix your personal money with IRA money. Incredibly important.
Yeah, incredibly important. Yeah, I was just thinking though about that investor. If they accidentally do get a check from the operator, they need to know that. Like, if they don't cash that check though, it's okay. Like, if they just ripped
Yes.
it up, then they
Yes.
can fix it, right?
Yeah, they should. The investor should call the operator and say, hey, you sent me this check, thank you, but this needs to be made payable to my IRA. Here's how you make it payable. Here's the address. If it's a wire, here's where you should be sending it. If they got a wire, that's another problem, because then they did receive it. But if it's a check, absolutely do not cash that check.
All right, Kaaren, just a few more questions before we run out of time. But what's the hardest part of this process, or even for you as a custodian? What's been the hardest part?
It's people not understanding self-directed IRA rules or what's involved in self-directed IRAs, having the wrong expectations, thinking that services are provided that aren't provided. We just do so much education online and in person on our website to help. And then when people call us and contact us, we send them emails and talk to them and give them so much information. But people will misunderstand things like, well, for example, if your asset has a zero value, you need to understand that upfront about self-directed investing. Now you've invested, asset value is zero. We can't just write it off. We can't just say, oh, you told us it's zero, we're going to say zero. IRS doesn't let us do that. We have to have a third-party valuator come in and tell us. So maybe an asset sponsor, it's happened once or twice where an asset sponsor stole money. We hate that. But if that happened, you actually have to go out and have a valuator prove that your asset is worthless. So I know it's adding insult to injury, but we can't just write it off. And that's something that people don't understand up front about self-directed IRAs. Incredibly important to have that correct expectation. Hopefully you do your due diligence, you make great investments. And sometimes even when you do all the due diligence in the world, you can't foresee a recession or something that could cause a catastrophic event in your investment. But if the asset value is zero, we can't just, it would make us a fiduciary if we valued the asset, and we are not fiduciary. And with that word comes just a cascade of responsibility. So that is not a mantle that we wear. We're not the fiduciary, but a evaluator is, and they can give us a valuation. We'll write it down.
What's a way that you have recently improved your business that we could apply to ours?
Always improving, right? I think my favorite improvement that we've done is to add a portal on our website so that when people are sending us documentation, it's not going through email. So that you can upload information through a SOC 2 compliant portal, and then we receive it on our end, and then it's treated in that way. When we send you confidential information, it'll also be encoded through the same, again, SOC 2 compliant portal, so that you are getting this information in the safest way that we know how to send it to you.
I like that. And what's the number one thing that's contributed to your success?
Just keep swimming. I think consistency, being there, it's suit up and show up. It's not difficult once you've networking. That's incredibly important. That's been the groundwork for my success, has been having a network of just the most amazing people. That has been it. But then you just suit up and show up every day and just keep moving forward in a positive direction.
And how do you like to give back?
Oh, in so many ways. Giving back to the employees, giving back to we're limited by the IRS how much we can give back to our account holders to $10. So a lot of times we'll give a free book. So there's that. But in the community, I volunteer for the Council on Aging Southern California, helping seniors. And that's something that the company benefits from, but I sure do, because it's a great feeling to help so many seniors that have nobody, and to be able to help them is very gratifying and wonderful. Also, I serve on the board of directors for the Retirement Industry Trust Association, as you mentioned. So I give back to our industry by helping. In fact, we're having a conference coming up, and I'll be leading a panel discussion on cannabis investing in IRAs, which you cannot do, okay? But there's something called the SAFE Act, and it's a banking act talking about maybe are we going to allow, as in this country, banking with cannabis deals? Why, what's the deal? What's on the horizon in case this all becomes federally legal, and then it's a thing. So I'll be leading a panel discussion on that. So I give back to my industry in that way.
Nice. Well, Kaaren, thankful for your time and just sharing your expertise, some very valuable information. And but tell the listeners how they can get in touch with you.
The best way to get a hold of us is send us an email, info@uDirectIRA.com. It's a letter U, uDirectIRA.com. So that is a very best way. Look at our website too. It's uDirectIRA.com. So much information there for you to learn about self-directed IRAs.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.